Good morning, everyone. Welcome to our weekly live room at binary.com. So glad that you could join us today on the Monday, 11th of November 2013. And we're going to take a look at the Forex market and gold as well in just a second, because we're going to take a look at this PowerPoint, of course, first of all. So once again, hosted by binary.com. My name is Chris, and we're going to explain the risk disclaimer. Trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thank you for your attention on that. If you're new and you're wondering how you can get a recording, that can be done through this link. So please pause the video when looking at the recording, because this is a live session, or write this down, blog.binary.com/weeklytradingroom, and you'll be able to see or get an email when the recording is ready. And you can, of course, watch live at 7 a.m. on Mondays. So let's move on to take a look at all of our currencies, starting with the euro dollar, in fact. Now, this week, we have a bank holiday in the US. I'm not sure if it's a big bank holiday or not, but the banks might be closed, for example. And last week, of course, we had a very big interest rate cut on the euro, and also positive USD numbers, positive NFP, positive unemployment rate. So quite maybe bearish fundamental sentiment here on the euro dollar, for example, and bullishness maybe in general on the dollar, and weakness on the euro. If we move on to, for example, this week, I don't see anything so far, except maybe the Bank of England inflation report and claimant account change unemployment rate. That could be big news we should be aware of. Fed Chairman Bernanke speaking on Wednesday as well. And other than that, just the typical, usual weekly news. Alrighty, so let's move over to the euro dollar, in fact. And we're going to take a look at the big picture first. Let's take a look at the weekly chart to see if anything is very important to look at, for example, price action. So let's zoom in, and we can see that that was a very bearish week, right? You can see the close of last week lower than the open, and pretty close to the wick. If we really zoom in a lot, as much as I can, last week's close was very near the low of that week, indicating a lot of selling pressure within that week, and no doubt that that's a bearish signal. We already had, of course, a bearish engulfing twin right in here. We got the follow through just after a very small retrace, as you can see. So to me, this euro dollar remains bearish. We've had fundamental aspects confirming that as well. So, not sure exactly if we'll get tapering or when we will get it, but there are definitely signals and clues that that might happen. And the technicals also look very bearish. So if you place those two together, I think we can expect continuation. All right, you can see the support is broken, for example, etc. A lot of thrust to the downside here. So if we then zoom into the day chart, we can see that thrust to the downside. And if we don't move into the 4-hour chart, you can see a very lengthy downside. In fact, looking at this, I wouldn't be surprised to expect one more downside, in fact. And I would not expect a break above, for example, this 135.50 zone. That's the very, very max that we could expect. Probably, I think, maybe a move up to 135.20 could happen like this, like a correction. But that should be a resistance level for one more downside to break this bottom. So that's what I expect in the intermediate future on this euro dollar. A potential to move up, but then find resistance at that 135.20, 135.50 zone to move down. Let's see what the potential is, how far we can move down. Mind you that the 135 itself is also resistance, because that's the 38.2 Fibonacci retracement level. The target of this downside could be all the way at 131.50. So it's a good move still, and then maybe we can expect a bigger correction. But for the moment, that's what I would expect, up and down. Now, if we don't move up that far, if we don't move all the way up to 135.50 or 135, then we can keep an eye on this trend line, for example. And if we would break that, then there's a high chance that it will probably continue down and not retrace that high. So those are the two things I'm looking for: a retracement to this level or a break of that trend line, basically, for that downside continuation. After that, we could maybe expect an ABC, a bigger three-wave correction, and then downside again. All right, but that's probably of later concern, but that's what I would expect. So let's take a look again at the bigger time frames and piece it all together. You can see the minus 272 would also correspond to a support level right in here. And let's take a look at the weekly again. Yeah, you see the minus 272 is a weekly, right in front of a weekly bottom. So down, up, down is what I expect. That down, the second down, the bigger down basically, because you know what we were talking about from 135 to 131.50 is actually still a small move compared to what could happen after that. Because as I've been saying probably last week and the week before, this could be a correction that is over, and that could be big downside there. Potential. Let's see if that pans out step by step, because that's a very big prediction, but you know, that's something we have to adjust and confirm every week. But one thing's for sure is that we'll have space to retest this bottom, for example. So if we bounce here, continue maybe down to this trend line. If we break that trend line, you know, we can continue to the next support. So we'll take it from one support to another. Obviously, this 128, 127 zone will be the next major level once we break 131.50 or 131. That would be the next main target. If we break 128, then we can aim for 122, which is this one where I have the green arrow, etc. So let's see. Let me check if there are any chats by any chance. Alrighty, good. I don't see any, so let's move on to the pound dollar. All right, there it is. This is the weekly chart, and we can see a doji here at top and double top, and we had a very bearish week. But I was saying, watch out for this weekly support, because that's always a level that the currency could respect and could bounce off. That's what happened, and we're seeing that bounce right now. So what does that bounce mean? Well, let me first actually explain the very long term, just quickly. We are potentially, just like the euro dollar, at a very bearish turning spot. This could be the completion of a triangle, and if this is the completion of a triangle like this triangle, then that could be quite bearish, and we can expect a pretty good fall, maybe down to 140, 130, maybe 120. So let's take a look if that could be the bearish turn. One thing we have to note is that this level is very key, of course, that we couldn't break that level. Right in here around 159, 158.90. So once we break that level, that will be the confirmation of that bearish, first of all, because that's the weekly support, and well, that would be the real confirmation of that. Until then, we just can maybe speculate on the fact that this was double top, but obviously we've been stuck in this, between these two levels, these two green lines, ever since mid-September. For 2 months we've been stuck in that level. So once we break out to the downside, that would be a confirmation. The break to the upside would not have that much space, but we would already bump into resistance at 163.30 and 163.50, so beware of that. If we then zoom into the lower time frames, we can see a potential of this being a 5-wave, for those of you who like Elliott wave. And what I'm looking for is basically the same like euro dollar. I'm either waiting for a break of this trend line, or I'm waiting for a deeper correction all the way maybe back to the 78.6%, which is at 161.77. So either a break right here for downside, or if we do correct higher, downside from this level. All right, so that's what I'm looking for. Um, we also have a trend line here, like that. So it's kind of like a triangle. If we break that triangle to the upside, we might have some space, but watch out for that resistance right at the 78.6. Alrighty. Other than that, let's take a look at the target. The target could be very deep, but at minimum, we would expect to move to 156.80. But if we do break this bottom of 158.90, we could expect probably even all the way to 154.50, 155, I would say. There could be a lot of potential there. This is the 1 hour chart, and there is reason to believe that this could be a correction for one more correction upside. It's not the best to trade. I would rather wait for the bearishness, but it's possible. Alrighty, let's take a look at the dollar yen. Dollar yen had a bullish week, just like the week before, and we're breaking above this weekly resistance. So that could be a potential confirmation of a triangle finish, but we're still waiting for a break of this top at 100.60, but also this trend line. That would be the confirmations of a continuation to the upside. Obviously, that continuation would follow this big thrust to the upside, so that could have a lot of potential and could bring us all the way to 110, 115, 120. Could be very bullish. All right, so that would be a very interesting trend on the dollar yen upside. Would be very interesting trading if we break this triangle for that upside thrust. Let's take a look at the daily chart. We would really need the currency to bounce somewhere in here, about around 98.50, for that to be confirmed. We would also need to break above that purple line and above the green line for the bullish count to get that confirmation. Until then, we're not sure if that is really true. We never know. This could still be a triangle, in fact. And what could happen is that this is a triangle. I'll show you how, like that. First part, second part, third part, fourth part, fifth part for a B. And now we, in fact, move down for red C. That C should end 91 or 90, and then we should see the upside from 90 or the 91 level. That's possible as well. So that's why it's important to wait for those confirmations and those breaks, because this could happen too. And although I think that looking at the weekly and monthly chart, that upside is more likely, we still need that confirmation. So nothing really to say. Maybe 1 hour chart, we can see that this is a potential 1, 2, maybe 1, 2 for those of you who like Elliott waves. So I wouldn't expect anything below 98. Otherwise, really, maybe the bullish count is not getting the follow through. Let's take a look at the Aussie. Aussie had 3 weeks of bearishness in a row. It's moving slowly but surely to the downside. There's still one important level though, the weekly support at 92.80, that needs to be really broken for us to expect maybe longer term downside. Obviously, we've had a very good thrust right in here to the downside, but for that thrust to get continuation, we would need to break below 92.80, and we have some downside down to 88, and then break below 88, we could see maybe we move down to 85. This is the daily chart, looking pretty bearish on the daily. A lot of daily bearish candles to the downside. And this is the 4 hour. Very nice break of this trend line here for continuation. And during NFP, we had a pretty good continuation to the downside, in fact. Let's take a look at the 1 hour chart. You can see that right now. And while looking at the short-term time frames, any move up would seem a very good bearish move, in fact, for continuation to the downside. I wouldn't see why that would change, especially keep an eye on this trend line maybe, or any move back to these bottoms, for example, or any fib in here, for example, around 94. Could see the continuation to the downside. For example, a level around 94.13 could easily be a correction as well for downside continuation. Two, let's take a look what the target could be. The minimum target probably, yeah, 93.20. That's also well above the 92.80, which is a weekly support. So that could be a move from 94.14 to 93.20. Something like that. Alright, so that's the short-term intermediate future what I would expect. Otherwise, if we do break above the trend line and then start to do this, start to break above the trend line and start to make a bull flag like this, then we could expect maybe a bigger correction to the upside. Until that happens, I'm not looking for any bullishness on the Aussie. So I think we've looked at all the four indeed. Let's take a look at gold now. Gold had also several weeks of downside. If we put that in the bigger picture, we can see a very big thrust to correct on gold all the way down to 1180. Now the question is this upside like that? Maybe back to the 1520 bottom here? Oh, I can't. Back to this bottom I wanted to draw. Well, let me just put a line there. Back to this bottom. Like this. Or can we expect downside, correction, downside? That remains to be seen. I do think that upside is a bit more likely, but I would say let's keep an eye on 1250. If we break below 1250, then maybe something else is going on, and we could see that downside to retest the bottom, and then maybe if we break the bottom, to continue lower. Anything above here, I would say, still could have a potential to bounce up, but the confirmation of such analysis would be a break above this trend line, but also a break above, for example, this high here, 1360, and we could see a continuation up to 1430, and then if we break that up to 1530. So that wraps up gold and also our session, in fact. So I will show you one more time the link that you need. Oh, well, first of all, thank you for your attention. And if you have any questions, let me know. But here's the link, blog.binary.com/weekly trading room. Besides looking at this webinar live at 7 a.m. GMT time on Mondays, every Monday of the week, you can take a look at the recording as well as soon as it's ready, a few hours later after the session is finished. If you register for this webinar at blog.binary.com/weekly trading room, only thing you need is the name and email address, and the things will be good to go. So I thank everyone and looking forward to see you next week. Wish you all great trading. Cheers.